Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Friday the 13th of September here in London. I'm Caroline Hepke. Coming up today, European investors search for ECB rate cut clues as Lagarde refuses to commit to a path. Vladimir Putin warns that letting Ukraine use Western missiles inside Russia would directly involve NATO in the war. Plus, one and done, Donald Trump rules out a second presidential debate with his Democratic rival Kamala Harris. Let's start with a roundup of our top stories. The European Central Bank gave few clues on when it would next cut interest rates after policymakers lowered the key deposit rate by a quarter point on Thursday. Following the cut, the bloc's second this year, the ECB President Christine Lagarde was vague about what's to come.
Well, I'm tempted to quote, Spanish, que será, será. Because we have consistently said, and we repeat again, that we shall remain data dependent. And that is particularly justified in view of the uncertainty that abounds.
Christine Lagarde speaking at the press conference following the rate decision. The ECB's new growth and inflation forecast showed a downgrade to output in the next 3 years, whilst the outlook for underlying inflation nudged higher for this year and 2025. Traders have paired bets on the ECB lowering rates next month, with a cut priced in for December. The Bank of England's former chief economist Andy Haldane says that the Chancellor's claim of a £22 billion black hole in government finances in the UK is unnecessary, unhelpful and a bad idea. Within weeks of taking office, Rachel Reeves warned that next month's budget would be a painful mix of spending cuts and tax rises. But Haldane says that the remarks have spooked businesses and investors.
It'd be much better to say nothing until you provide solutions to filling the black hole as well as revealing it. As it was, that's generated fear and foreboding.
Andy Haldane's comments come after the UK's official forecaster, the Office for Budget Responsibility, warned that public debt will exceed 270% of GDP in 50 years unless the government can revive productivity growth and tackle the challenge of an ageing population. Prime Minister Keir Starmer has arrived in Washington ahead of a meeting with President Biden. Sources have told Bloomberg that the US and UK are discussing allowing Kyiv to conduct strikes inside Russia using British cruise missiles backed by US navigational data. Speaking yesterday, Russian President Vladimir Putin warned against the move.
This will be their direct participation, and this, of course, will significantly change the very essence, the very nature of the conflict. This will mean that NATO countries, the US and European countries are at war with Russia.
The words of Vladimir Putin there, spoken via a translator. Responding to that warning, Keir Starmer insisted the UK isn't seeking conflict with Russia, but that Ukraine has a right to defend itself. The discussion comes after the US confirmed that Moscow has received shipments of ballistic missiles from Iran. Chinese President Xi Jinping has called on officials at all levels to achieve the country's annual GDP goal, as economists increasingly suggest the country could miss its 5% growth target. China's bond traders, meanwhile, defied signs of intervention to push yields to a record low, setting the stage for a showdown with authorities who are seeking to tame the blistering debt rally. The yield on the most actively traded 10-year sovereign notes slid to 2.075% as traders sought to get their hands on the safest assets in the face of a slowing Chinese economy. A car lobby is calling on the EU to delay its emissions targets for automakers by 2 years. Bloomberg has seen a draft report from the European Automobile Manufacturers Association warning of billions in fines coming down the road. Bloomberg's James Walcock has more.
There's low demand for EVs and foreign countries are subsidising rivals unfairly. That's the essence of the manufacturers' argument. Their draft report says emissions rules coming into force next year could end up fining the industry €16 billion or halt the production of 2 million cars. A consumer lobby responded to Bloomberg's reporting, saying these targets were set 6 years ago, and it's a sign the industry has not prepared well for the green shift. In London, James Woolcock, Bloomberg Radio.
Donald Trump has ruled out a second debate with Kamala Harris 2 days after polls suggested he lost the first. A CNN Snap poll showed viewers thought the vice president performed better than Trump and that her odds of winning rose in betting markets after the debate. In dueling rallies yesterday, the two presidential candidates argued about a rematch.
As everyone saw 2 nights ago, we had a monumental victory. So because we've done 2 debates and because they were successful, there will be no third debate.
Trump also lashed out at the ABC News moderators, calling them lowlifes and accusing them of bias. Kamala Harris, on the other hand, is keen on a second clash.
Donald Trump is not fit to be president of the United States and should never again occupy our nation's highest office. I believe we owe it to the voters to have another debate.
The vice president and her team began calling for a second debate before the candidates had even left the stage in Philadelphia. Polls have found Trump and Harris generally running neck and neck in surveys of the 7 swing states expected to decide the US election. And OpenAI is releasing a new AI model capable of performing some human-like reasoning tasks. Known internally as Strawberry, the company says that it can handle complicated maths and coding problems. A preview version of the model will be available through OpenAI's popular chatbot, ChatGPT, to paid Plus and Team users. It comes as Bloomberg revealed that the startup is currently in talks to raise $6.5 billion from investors, valuing the company at $150 billion. And lastly, just in breaking news this morning, Boeing factory workers will strike from midnight, potentially crippling manufacturing across the plane maker's Seattle commercial jet hub after members of its largest union rejected a contract offer and voted to strike. Those are our top stories for you this morning. But first, how many sick days did you take last year? Was it the average 8 days that workers here in the UK took, or perhaps the meagre 2 days last year that US workers took off when they were unwell? Or was it more akin to the situation in Germany? Workers there are taking at least 15 days off per employee per year for sick leave, some even 20 days per year. That's the highest rate across Europe. Bloomberg opinion columnist Chris Bryant has been writing about that. Desperate employers apparently are introducing all sorts of incentives for workers to take fewer sick days, even bonuses. Perhaps that's a bit of a slippery slope, he argues, but it's also a kind of last resort, especially when you note that economists say that if attendance was better, Germany could have actually avoided a recession last year. It's one of the interesting stories that I was reading before coming on air this morning. Have a look at it. Chris Bryant on the Bloomberg terminal. You can catch it just by typing OPIN on the terminal, or also look at the bloomberg.co.uk website. Now, the European Central Bank cut its key deposit rate by a quarter point on Thursday, as expected, with new projections showing how drastically the economy is expected to deteriorate over the next 3 years. But there were few clues from Christine Lagarde about the future path for rates. Joining us now to discuss this is Bloomberg's ECB watcher in Frankfurt, Jana Randau. Good morning, Jana. Great to speak to you as ever. So a second cut this year. What was the reasoning behind that?
Yes, a second cut, and the reasoning was clearly that inflation is making progress toward the ECB's 2% target. The policymakers received updated projections this week that showed the target, the 2% target, being reached by the end of next year. And Lagarde went out of her way saying this is the 5th forecast round where that scenario, that baseline, was actually confirmed. So confidence is rising that their policy is making a difference, that they're on track, and so they're dialing back the restriction to make sure that the economy doesn't suffer more than necessary.
And so what are markets predicting now for the end of the year, for the October meeting and beyond?
So October is a bit of a strange one because markets actually paired bets after listening to Lagarde, who, unlike at past meetings, did not give anything away. So she was invited several times to give some sort of a nudge as to what happens in October, which by the way is just 5 weeks away, that meeting. But she politely declined and said, look, we're data dependent, we're going to look at what's coming in and then we're going to take our decision. But yeah, the market took it as a signal that maybe it's too short a time period and paired bets. So the next step that they're looking at is December. Then, we spoke to a few of our sources, of course, and they said, it's a likely scenario, but they did not want to take October off the table. And that obviously has to do with the fact that they got burned before by giving guidance and then had to follow through when in fact the situation changed and they would have preferred a different outcome. So maximum flexibility from the ECB for now on. But yeah, we're looking at December, realistically.
Yes, okay, very interesting. Also, Bloomberg speaking, of course, to ECB policymakers Nagel and Simkes on a good course to reach the inflation target. Inflation is calming down. A couple of comments from the ECB policymakers. But it's all a prelude, isn't it, a little bit? Can I put it that way? A prelude to the Fed's potential first cut next week. Briefly, the expectations there, Jana.
Yeah, so expectations, it's unusual for the Fed, to have this uncertainty whether they're going to go 25 or 50 basis points. You can hear voices in either direction. And that's probably also why the ECB doesn't want to say too much on where they're going, because despite all the talk about we're setting monetary policy independently and for the region, of course, it makes a difference what the Fed does.
Yeah, absolutely. Jana, thank you so much for your time this morning. Bloomberg's European economics reporter, Jana Randau. Now to Ukraine, which has made urgent pleas to lift restrictions on how US and UK weapons can be used in the war with Russia. The US and UK governments are discussing the issue, but you heard the Russian President Vladimir Putin earlier on the programme with his warning that NATO would be at war if they allowed longer-range weapons to strike inside Russia. Joining me now is our Russia economy and government editor, Tony Halpin. Tony, good morning. Firstly, just what additional weaponry and capabilities are being discussed for Ukraine?
Yes, good morning. Well, it seems that the attention is focusing most at the moment on what are called British Storm Shadow cruise missiles. And it appears to be focusing around a combination of allowing these missiles to be used by Ukraine with support from US GPS tracking data that would enable them to strike their targets with a high degree of accuracy. Until now, the US hasn't been willing to allow that data to be used. The British have supplied Storm Shadow to Ukraine in the past, but they've been used more or less within the battlefield zone in Ukraine itself. So the discussion there is about allowing those missiles to be used at a greater range.
How seriously, though, is the warning from Putin being taken?
Well, I think anytime a major nuclear power warns that it may be at war, everyone soberly assesses the risks. Putin has said that. He's also said on a number of occasions that steps taken by the Allies to support Ukraine would amount to an escalation to which Russia would respond. And so far, at least, those warnings have proven unfounded. The CIA director, William Burns, said last week, in fact, that the West should take note of Putin's warnings but shouldn't be intimidated by them. I suspect that's the approach they'll take.
OK. The US presidential election is looming. How much of this is being driven by that date?
Yes, I think in part it is, because there'll be a degree of policy paralysis, if I can put it, between the election date and whoever wins the election and takes office in January. And it's partly driven also, I imagine, by the question of who wins that election. Donald Trump in the election debate this week was much less categorical than Kamala Harris about whether he'd support Ukraine winning this war. So yes, in part the election is driving this discussion, but also winter is coming and it's much more difficult in winter conditions to take advantage of tactical gains in the war. So that's also driving this, that if something's going to happen, it should happen before winter sets in.
Lastly, with all your experience and the people that you speak to, what's your assessment of Putin's mindset? I mean, it's a hugely difficult question.
Yeah, well, he's in a difficult place because, this was a war that was supposed to last a few days, a couple of weeks, and it's now deep into its third year. And the allies that support Ukraine are showing no sign of weakening in their support. So, and on top of that, he now faces having to expel Ukrainian forces from Russian territory in his Kursk region, which is at the very least embarrassing and reflects poorly on his image as a strong leader for Russians. So he's clearly got mounting odds against him. The challenges are growing. But at the same time, there doesn't seem to be any sign that he's preparing to make concessions or to come to the negotiating table. And I suspect he's waiting for the results of that election, as you said.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.